I almost fell. Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information to help you reach your financial independence. Today, guys, I want to talk to you about how you can actually pay off your home 5 years early. If this is your first time joining me, go ahead and hit that subscribe button, like button, and then leave me a comment below. So, one of the biggest challenges you have in your financial journey is starting to know when to pay things off. Now, with your car, credit cards, student loans, that's easy. But when you start to go down the path of your house, it gets to be a little bit more strategic. And if you look up paying off your home early, you'll get a lot of mixed messages about it. Why? Because it's important that you understand this is a very, very personal decision. It's definitely has business impact, but ultimately you have to do what's going to be right for you. So in this video, we're going to definitely talk about paying off your home so that it's 5 years early, paying it off 5 years early. So one of the first things you can think about is you take an example of a $150,000 home with a 4% interest rate over 30 years. You will pay $107,000, about $107,000 in interest. Guesstimate, but that's again for simple math. Why do you want to pay your home off early? Well, the thing about paying your home off early, it's all to be how much you're paying in interest. So if in this example of a $150,000 home, you pay just $100 extra, $1,200 a year throughout that duration, you will actually have paid that home off in about 74 months, which is a little over 5 years. And you will have paid in interest about $82,000, just over $82,000. So you saved about $25,000. Well, Jonathan, I paid $1,200 a month extra for, let's say, 25 years. I paid a good $25,000, $30,000. Yeah, but that $30,000 went straight to the debt and it saved you interest. See, that's how this loan stuff works. When you're paying extra, all you're trying to do is avoid how much interest you're paying so that more of your debt is going. Now, let's really be realistic in this fact that $100 extra for 25 years. So nothing else occurred to where I needed that $100 extra. Exactly. So you got to think about what are other ways I can put myself in a plan that, yeah, I can get myself ahead, but also just using the money that I have. So first thing I want you to think about is, can you actually pay extra? Is it $1? Is it $50? Is it $100? Whatever you can do, pay extra. That's one way of going about paying your home off to where it's 5 years early. The second thing you could think about is one of the things me and my wife did was refinance from a 30-year down to a shorter term. In our case, we went to a 15-year. Why? 15-year rates was great. At the time, the payment was about the same of what we were all paying. Thankfully, our value's gone up, and so our payment's a little bit higher. But the fact is, it didn't change our budget too much. And so we were able to shave off 10 plus years just by moving the term from a 30-year to a 15-year. That's another great way to get ahead very quickly. It's also a great way because more of your payments that you're paying every month is actually going towards that principal payment of your house. The next thing you can think about is tax refund. Do you normally get a tax refund? Well, the average tax refund is about $2,833. If you use that same tax refund in the example that I gave of $150,000 a year mortgage, $150,000 mortgage at 4% over 30 years, if you pay just your tax refund at 28, or the average tax refund, $2,833, you will shave off 4 years. All these different methods can help you pay off your home in 5 years. Another good method, which is not as common in the marketplace, but it still can be done, is making bi-weekly payments. Well, why does bi-weekly payments work? Well, bi-weekly payments does two things when you're actually trying to pay off your mortgage. One, it gives you one full extra payment a year, which can be helpful just in general, shave off some years. But because you're doing it bi-weekly, your interest is calculated daily. So when you're paying halfway through the month, you're actually cutting the amount of interest you're actually paying throughout that process. So if you look at your car loan, and this works with any loan, car loan, personal loan, mortgage, but if your due date is the first, which a mortgage is the first, you decide, hey, I'm going to pay my loan every 2 weeks. If you pay your loan every 2 weeks and you have a friend who has your same situation, or they don't even have your same situation, well, yeah, it works better with them having your same situation as far as loan amount, and you sit them next to you and they paid every month on the first every month, you will actually have paid less in interest just with the same money. The whole point of this piece is to help you eventually own your home. Now, keep in mind, what are some drawbacks of paying off your home early? Well, you can deal with prepayment penalties. You can deal with them not being able to apply your payment to just principal. It's important if you're making any extra payment, you have it known and marked down and you specify that this is a principal payment. The next thing is you pay off a loan. It could make your credit score eventually go down because you don't have that debt out there. But what does it do for you? Well, it frees up this extra cash flow, a mortgage payment, all to yourself. You're not getting charged any extra interest. And to be quite honest, when you own your home outright, there is a certain level of peace of mind that you actually get in that transaction. Are there other things you could do with this money? Yes, you can invest in a business. Yes, you can invest in the stock market. Yes, you can invest in other ways to maximize your money. But these are ways that you can actually help yourself move forward in what's considered and what typically is the largest debt for most Americans. Does this make sense? Is it time for you to pay your home off early? Well, right now, the first thing I would look at is, if I'm you, do you have opportunity to refinance? With historically low rates, you're hovering around 2.5% for just 15-year, 20-year mortgages. This could be your opportunity to really get some steam with money you're already putting out there. Not to mention, your payment could likely go down because if you're 5, 6, 7 years in, well, your mortgage now re-amortizes on the lower loan amount. And if your value went up, refinancing can drop that PMI. Money that you were spending that's not really helping you pay down the mortgage. All these things can help you by starting with the refinance. But the important thing is you should understand that you can pay your home off 5, 10, 15 years early, but make the decision that's right for you. I hope you guys enjoyed this video. If you like it, give it a thumbs up. If you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.